Demystifying BITO. 12 essential questions answered for Bitcoin ETF investors. Hey crypto enthusiasts! Are you curious about the ProShares Bitcoin Strategy ETF BITO, but unsure how it works? You're not alone. BITO has opened up new avenues for exposure to Bitcoin, but it also comes with its own set of complexities. In this video, we'll tackle 12 crucial questions that every investor should ask about BITO before diving in. We'll cover everything from how it tracks Bitcoin's performance to how it handles risks, liquidity, and security. We'll also explore its potential impact on professional investors and how it navigates the ever-evolving crypto landscape. So buckle up, grab your coffee, or your favorite crypto beverage, and get ready to unlock the secrets of BITO. Question 1. How does the ProShares Bitcoin Strategy ETF, BITO, aim to track the performance of Bitcoin? The ProShares Bitcoin Strategy ETF, BITO, aims to track the performance of Bitcoin indirectly, through investing in Bitcoin futures contracts, rather than directly holding Bitcoin itself. Here's how it works. 1. Investing in Bitcoin futures. BITO doesn't hold any actual Bitcoin. Instead, it invests in near-month Bitcoin futures contracts. These contracts represent an agreement to buy or sell Bitcoin at a predetermined price on a specific future date. By holding these futures contracts, BITO exposes its investors to the price movement of Bitcoin, without needing to deal with the complexities of directly acquiring and storing it. 2. Rolling futures contracts. As the near-month futures contract approaches its expiry date, BITO rolls it over to a further dated contract. This ensures continuous exposure to Bitcoin's price movements. However, the rolling process can introduce tracking differences. The price of futures contracts can differ slightly from the actual spot price of Bitcoin, and these differences can accumulate over time. 3. Performance. Overall, BITO aims to track spot Bitcoin performance, the current market price, but due to the futures contracts and rolling process, it may not perfectly match it. Historically, BITO has tracked Bitcoin's performance relatively closely, but there have been periods where tracking differences have emerged. Question 2. How does the ProShares Bitcoin Strategy ETF handle the rolling of Bitcoin futures contracts? The ProShares Bitcoin Strategy ETF, BITO, handles the rolling of Bitcoin futures contracts in a specific process that involves several key steps. 1. Monitoring contract expiration. BITO continuously monitors the expiration dates of its near-month Bitcoin futures contracts. As the current contract approaches expiry, typically around 2 weeks before, the fund initiates the rolling process. 2. Selecting the new contract. The fund manager chooses a new, further dated Bitcoin futures contract based on several factors, including contract maturity. The chosen contract should have enough time remaining until expiry to avoid frequent rollovers and minimize tracking differences. Liquidity. The contract should have sufficient trading volume and tight bid-ask spreads to ensure smooth and efficient execution. Cost. The fund aims to minimize the cost of rolling, considering the price difference between the expiring and new contract. 3. Selling the expiring contract. BITO sells its expiring near-month futures contract on the exchange, aiming to capture the current market price. 4. Buying the new contract. Simultaneously, the fund uses the proceeds from selling the expiring contract to purchase the chosen further dated contract. This ensures continuous exposure to Bitcoin price movements without a gap between contracts. 5. Tracking differences. While the goal is to minimize tracking differences, they can occur due to a basis, the difference between the futures price and the expected spot price of Bitcoin at expiry. Rolling costs, transaction fees, spreads, and potential price changes during the rolling process. Additional considerations. BITO employs a passive rolling strategy, meaning they primarily consider the factors mentioned above and don't actively attempt to time the market for more advantageous roll timing. The fund's prospectus discloses further details about the rolling process, including the specific criteria used for selecting new contracts and the potential impacts of tracking differences. It's crucial to understand that the rolling process can impact the performance of BITO compared to the direct price of Bitcoin. While the fund strives to minimize these effects, it's a factor to consider when evaluating the ETF as an investment option. Question 3. How is the ProShares Bitcoin Strategy ETF structured to mitigate risks associated with investing in Bitcoin? It's important to understand that while BITO attempts to mitigate some risks compared to direct Bitcoin ownership, it still carries inherent risks associated with Bitcoin and the futures market it utilizes. Here's a breakdown of how BITO attempts to manage risks. Reduced regulatory risk. BITO avoids the complexities of directly holding cryptocurrency, which faces regulatory uncertainties in some jurisdictions. This can offer peace of mind to investors wary of potential regulatory hurdles for owning Bitcoin itself. Professional management. BITO is actively managed by ProShares, a reputable financial institution with experience in managing ETFs. This offers some level of risk mitigation through their expertise in navigating the Bitcoin futures market and managing the rolling process. Diversification. BITO holds a basket of Bitcoin futures contracts with different maturities, aiming to reduce concentration risk compared to holding just one expiring contract. Transparency. BITO provides detailed disclosures in its prospectus and regular reports, outlining its investment strategy, risks involved, and historical performance. This transparency allows investors to make informed decisions based on available information. However, it's crucial to remember that BITO still carries significant risks, including Bitcoin price volatility. BITO inherits the inherent volatility of Bitcoin prices. Even with futures contracts, the price can fluctuate significantly, leading to potential losses. Tracking differences. As discussed previously, the rolling process can introduce tracking differences between BITO's performance and the actual spot price of Bitcoin. Counterparty risk. BITO relies on counterparties, e.g., futures exchanges, to fulfill their obligations. If a counterparty defaults, it could negatively impact the ETF's value. Futures market risks. The futures market itself carries risks, such as liquidity constraints, potential manipulation, and margin requirements that can amplify losses. Regulatory changes. Regulatory changes in the Bitcoin or futures market could impact BITO's operations and performance unpredictably. Overall, while BITO offers some advantages in terms of regulatory clarity, professional management, and diversification compared to direct Bitcoin ownership, it's not a risk-free investment. Question 4. How does the ProShares Bitcoin Strategy ETF manage liquidity, especially during periods of high volatility in the Bitcoin market? The ProShares Bitcoin Strategy ETF, BITO, manages liquidity in several ways, but it's important to understand that liquidity challenges can still arise, particularly during periods of high Bitcoin market volatility. Here's a breakdown. Underlying liquidity. BITO invests in near-month Bitcoin futures contracts, which are generally highly liquid instruments traded on regulated exchanges. This provides access to a broader pool of buyers and sellers compared to directly holding Bitcoin. Creation and redemption units. BITO offers large creation and redemption units, allowing institutional investors to enter and exit positions in significant size, without impacting liquidity significantly. Market makers. BITO utilizes market makers who actively quote bid and ask prices, facilitating smoother trading and improving liquidity, especially during periods of lower trading activity. Challenges and considerations. High volatility impact. During periods of extreme volatility, the underlying Bitcoin futures market can experience reduced liquidity, making it more challenging for BITO to buy and sell contracts efficiently. This can lead to wider bid-ask spreads, increasing transaction costs for investors. Tracking differences. Increased volatility can also exacerbate tracking differences between BITO's performance and the spot price of Bitcoin, as the cost of rolling contracts can fluctuate more significantly. Large redemptions. If a large number of investors redeem their BITO shares simultaneously, it can create selling pressure, potentially impacting the ETF's price and liquidity. Additional points. BITO's prospectus discloses its liquidity management strategies and potential risks associated with reduced liquidity. It's crucial to remember that liquidity risk is inherent to any investment, and BITO is not immune to this risk, especially during volatile periods. Investors should be aware of these potential challenges and carefully consider their risk tolerance before investing in BITO. Question 5. How does the ProShares Bitcoin Strategy ETF handle custody of Bitcoin assets to ensure security? It's important to clarify that the ProShares Bitcoin Strategy ETF, BITO, doesn't directly hold any Bitcoin assets. Instead, it invests in Bitcoin futures contracts, which are agreements to buy or sell Bitcoin at a predetermined price on a specific future date. Therefore, the question of custody of Bitcoin assets doesn't directly apply to BITO. Here's how BITO ensures security within its structure. Focus on futures contracts. BITO relies on regulated futures exchanges to hold and manage the Bitcoin futures contracts it invests in. These exchanges have robust security measures in place, including segregated custody. Client funds and assets are kept separate from the exchange's own holdings, minimizing risk in case of insolvency. Cybersecurity protocols. Exchanges implement advanced security measures to protect against cyberattacks and unauthorized access. Regulatory oversight. Futures exchanges are subject to strict regulations and regular audits, ensuring adherence to security standards. Additional security measures. BITO itself also employs various security measures to protect investor assets, such as Independent custodians. The fund utilizes reputable and independent custodians to hold its cash assets securely. Regular audits. BITO undergoes regular audits by independent auditors to ensure compliance with financial regulations and proper safeguarding of assets. Transparency. The fund provides detailed disclosures in its prospectus and reports regarding its custody practices and security measures. Remember, while BITO takes steps to ensure the security of its assets and utilizes regulated entities for futures contracts, there's always an inherent level of risk associated with any investment. It's crucial to understand that BITO's security measures focus on protecting its holdings of futures contracts, not actual Bitcoin itself. If you're concerned about the security of Bitcoin investments, consider directly acquiring and storing Bitcoin through reputable exchanges or wallets. However, this approach comes with its own set of security risks and complexities that require careful consideration and technical knowledge. Question 6. How does the ProShares Bitcoin Strategy ETF handle potential market manipulation or fraud within the Bitcoin market? While the ProShares Bitcoin Strategy ETF, BITO, doesn't directly hold Bitcoin, it still inherits some of the risks associated with potential market manipulation or fraud within the broader Bitcoin market. Here's how BITO attempts to address these concerns. Indirect exposure. BITO is exposed to Bitcoin through regulated Bitcoin futures contracts, which offer some level of protection compared to the unregulated spot market where manipulation might be more prevalent. Futures exchanges typically have safeguards in place to detect and deter suspicious activity. Regulatory oversight. The futures contracts traded by BITO are subject to regulations by the Commodity Futures Trading Commission, CFTC, in the U.S. This regulatory framework provides some oversight and helps prevent fraudulent activity. Market maker scrutiny. BITO relies on market makers to facilitate smooth trading. These market makers are also subject to regulatory scrutiny and have incentives to maintain fair and orderly markets. Transparency and disclosure. BITO discloses the inherent risks associated with Bitcoin in its prospectus and reports. This transparent communication helps investors understand the potential for manipulation and make informed decisions. Limitations. Despite these measures, it's important to understand that no system is foolproof. Manipulation or fraud could still occur within the regulated futures market, potentially impacting BITO's performance. BITO cannot completely eliminate the risks associated with the underlying Bitcoin market, where manipulation and fraudulent activity are potential concerns. Additional considerations. Investors should be aware of ongoing debates and concerns regarding potential manipulation in the Bitcoin market and its impact on futures contracts. It's crucial to conduct thorough research and understand the inherent risks before investing in BITO or any other Bitcoin-related investment. Investors seeking exposure to Bitcoin, with potentially less direct exposure to potential market manipulation, might consider regulated Bitcoin ETFs that hold the underlying asset instead of futures contracts. However, these options are also subject to their own set of risks and regulations.